Howdy, folks. Welcome to Liberty Call. Today is Monday, March 4th, 2024. Hope you are having a fantastical day out there. I'm having a pretty good day. Got my first weight workout in forever. I've had a bit of health issues over the last year, plus wasn't absorbing food. Had to do with I'm allergic to red dye, and I wasn't able to, I'd eat food. It just wasn't being absorbed, so I had like low salt, everything was bad. So finally got my guts back to normal, and I'm able to put on weight. In the last year, I probably put on 30, 40 pounds. Now I got to start, lifting weights again. So probably tomorrow I won't be able to, I'm trying to lift my arms to the keyboard. But anyways, like I said, hope you're having a good day and getting stuff done early in the week. If it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, a share, a subscribe, and a follow, and press that notification bell. I'm still out of breath. All right, let's go ahead and get into today's numbers and see how things turned out. Dow Jones was down 0.25%, 97 points. Closed at 38,989. S&P 500 down 0.11%. Closed at 5131. NASDAQ down 0.41%. Closed at 16,207. The VIX up 2.82 today. It's at 1348. Canada down a 0.1%. Brazil down 0.64. And Mexico down 0.14. In Europe, Germany was flat, down 0.03. The UK down 0.55. France up 0.28%. The Netherlands up 0.29%. Spain up 0.05. Italy down 0.07. Switzerland down 0.14. And Portugal down 0.39%. Russian exchanges both green today. MOEX up 0.91%. RTSI up 1.27%. And the Asian markets, the Nikkei was up 0.45%. Australia down 0.13%. New Zealand flat, down 0.01%. In China, the Shanghai was up 0.41%. The Shenzhen Component up 0.04%. China 50 down 0.13%. DJ Shanghai up 0.27%. Hang Seng up 0.04%. And the Taiwan weighted was up 1.95%. All right, so kind of a mixed day across the globe. The U.S. indexes had managed to get into the green. Let me bring up the chart here and we can look at it. Let's go to the minute chart. Here's the Dow. You can see it opened low, managed to get back around 2 to 3 o'clock Eastern time, back to the flat line. I'm closing let me move my thingy over here. And then it looks like it fell. Let's check out the S&P 500. Very similar, opened in the red, got into the green, kind of hovered around there until about 2:30, jumped, and then fell again. And I imagine the NASDAQ is very similar chart, very similar chart. So that was today in the markets. Let's get that off the screen. Okay. All righty. Well, let's move over to the weekly economic update. I know you're sitting on pins and needles waiting to hear what I have to say here. Stocks extended their tech-led advance last week as signs of a resilient and still enthusiastic consumer boosted momentum. NASDAQ sets new highs. Stocks traded in a narrow band early in the week, but ended the five trading sessions with a powerful advance. While the Dow dipped lower, artificial intelligence names powered the gains in the S&P 500 and NASDAQ Composite. The NASDAQ bobbed around the 16,000 level for most of the week before posting consecutive record highs on Thursday and Friday, surpassing its 2021 record. It was the last of the three major stock benchmarks to reach a record high this year. Economic news also helped boost markets. The Personal Consumption Expenditures Index, the Fed's preferred inflation gauge, rose 0.3% in January versus December and 2.4% on a 12-month basis. Both were in line with expectations. Stocks ticked up on Thursday following the release of the report. All right. Consumers remain upbeat with all the excitement over AI. It's easy to overlook some key economic indicators that also speak to the underlying strength of the economy, specifically consumer data. In addition to those closely watched PCE report, an end-of-week consumer survey revealed that while sentiment softened in February, it remained near a 32-month high. Fresh data this week also showed an unexpected jump in personal income. Finally, the PCE report also reflected an ongoing consumer shift from goods to services, a sign the economy continues to normalize after the pandemic. Since 2/3 of gross domestic product comes from consumer spending, these consumer-related metrics helped support the narrative that the economy appears to be gathering momentum. We shall see. All right. Economic data this week. On Monday, we have motor vehicle sales. Tuesday, factory orders and the ISM Services Index. Wednesday, the ADP Employment Report, the JOLTS Report, and the Beige Book. Thursday is the Federal Reserve Chair Jerome Powell speech, jobless claims, international trades in goods and services, productivity and costs. And Friday is the employment situation. Just a handful of companies reporting earnings this week. Tuesday, we have Target. Wednesday is Dollar Tree and Campbell Soup. Thursday is Costco, Broadcom, and Kroger. And from what I don't know if this was for sure, but I know Kroger and is it Albertsons? I think it's Albertsons are trying to merge, and which Albertsons owns Safeway, which is a big deal here in the Denver, Colorado Springs metro areas, because we have both stores, and those are primarily our only grocery stores here. So if they merge, you only got one company handling all the. Personally, I don't care. I like Kroger, but anyways, all right. So that's everything there. Let's move over to the market recap. U.S. stocks trim some losses, but remain cautious ahead of Powell's testimony. U.S. stock markets experienced a downturn on Monday, pausing from their record highs as Federal Reserve officials continued to express caution regarding potential rate cuts, especially in light of upcoming economic data and Federal Reserve Chair Jerome Powell's testimony later this week. Atlanta Fed President Raphael Bostic emphasized the need for patience with regards to rate cuts, highlighting concerns that premature cuts could fuel further economic expansion, potentially exacerbating inflationary pressures and reversing the Fed's progress in stabilizing the economy. These remarks preceded Powell's scheduled testimonies before congressional committees on Wednesday and Thursday, where he is expected to reiterate the Fed's stance on maintaining steady interest rates amidst persistent inflationary pressures. And I'm sure the people in Congress are going to be pissed because they want to get reelected. And when the stock market's kind of teetering around, it makes their getting elected a lot harder. Granted, they're the ones who caused these problems. They will fail to mention that at the time, I imagine. Analysts at Macquarie anticipate Powell refraining from committing to a timeline for rate cuts during his testimony, suggesting that a return to the dovish tone observed in December is unlikely. Meanwhile, investors await the release of February's non-farm payroll data on Friday, which could provide valuable insights into the labor market's current state, influencing future Fed decisions. In other news, tech giant Apple faced a significant antitrust fine of 1.84 billion euros from the Central European Commission for allegedly impeding competition from rival music streaming services on its App Store, causing its shares to decline by 3%. However, its gains in semiconductor stocks, particularly Supermicro Computer Inc., which is set to join the S&P 500, helped offset losses. Furthermore, Macy's stock surged over 14% following an increased takeover offer from an investor group, signaling confidence in the department store chain's future despite recent restructuring efforts. Additionally, cryptocurrency-related stocks experienced significant gains as Bitcoin approached its all-time high, with stocks like Coinbase Global and crypto miners like Marathon Digital, Riot Platforms, and CleanSpark rising sharply in response to Bitcoin's upward trajectory. Yeah, Bitcoin has been on a run. I would say be careful with it. It is extremely volatile. They're coming up on a halving, and I know that creates a lot of volatility there. So again, my best advice is, get as much knowledge on the subject as you can before you make any decisions as far as purchases or sales. So, all right. Next up, got a little diving a little deeper into some data, dispersion, correlation, volatility, and the stock bubble. And this comes from Zero Hedge, and this was submitted via Spot Gamma. Let's see what they had to say. All right. Dispersion, correlation, and volatility are key indicators shedding light on the dynamics of the current stock market bubble. Dispersion, the measure of SP Global, is soaring, particularly among mid-caps, indicating individual components of an index are moving more than the index as a whole. This signifies a lack of market breadth, with stocks diverging from performance. Meanwhile, correlation, depicted by the red line in the chart, is declining, suggesting that not all stocks moving in the same direction. Low correlation combined with high dispersion implies diverse individual stock performances independent of overall market movements. And we can see that, right here in these charts, you can see the dispersion and the volatility down here are splitting up. Where was I? Meanwhile, correlation. Okay, yeah, I read that. Correlation measures the degree at which stocks move relative to each other, with low correlation indicating stocks are moving significantly but in different directions. This lack of unified market trend raises concerns about the breadth of the rally, as certain sectors excel while others lag. Conversely, high correlation with high dispersion would suggest a uniform market trend with varying intensities among individual stocks. Interestingly, while dispersion is increasing, volatility remains stagnant, as depicted by the yellow line in the chart. The divergence between dispersion and volatility is reminiscent of the previous bubble periods, such as the late 1990s tech bubble. Despite soaring dispersion, the absence of corresponding rise in volatility raises questions about the sustainability of the current market rally, hinting at potential bubbles. To gauge the health of the markets, analysts suggest monitoring signals indicating a shift in the stock up, volume up regime. One such signal is changes in skew, particularly in options trading. Skew represented by the green line. We'll come down here. Where's the skew? Maybe it's probably one of these charts down here. It's hard to see. Anyways, representing by the green line reflects demand for upside calls relative to downside puts. A shift in skew towards historical norms may indicate a reversal in market sentiment, with upside demand waning and downside protection increasing. Such signals could mark the end of the party in the stock market bubble. Again, if you dig into the details, things just aren't as good as everyone likes to think. Like I said, in recent weeks, this reminds me a lot of 2007 and 8, where everyone thought everything was fine. You just throw darts at the newspaper in the stock section, and you had winners. So again, be careful. Things can turn really, really quick. All right, last up comes from our friends over at First Trust, Mr. Brian Westbear, their chief economist. This week's article is titled, "Is a Debt Spiral Already Here?" In 2023, the federal government of the United States faced significant fiscal challenges, with expenditures reaching $6.3 trillion, while tax revenues only amounted to $4.5 trillion, resulting in a $1.8 trillion budget deficit. I thought they were shrinking that. Isn't that what the people in government said? Yep, they lied. However, this deficit may be understated due to accounting maneuvers, including the reevaluation of student loan assets after a Supreme Court ruling. Despite reported deficit figures, actual borrowing exceeded $2 trillion to cover spending gaps. The escalating national debt, which reached $34 trillion by December of 23, raises concerns among investors about the sustainability of continual borrowing. Rapid debt accumulation since the suspension of the debt ceiling in June of last year, totaling nearly $3 trillion, signals potential financial instability. While temporary increases in tax receipts may provide short-term relief, the persistent trend of rising debt and deficits remains troubling. Yeah, because if we have a big recession and unemployment goes, 7-8%. I mean, that's not outside the realm of reason. Tax receipts are going to go down, and that's just going to widen the deficit. So now's the time to actually cut the spending so that we're not going to be in such a hole. But I'd also heard, was this over the weekend, that we're going up by $1 trillion in the debt every 100 days. So basically, 3 times a year, if we don't do anything to slow that down, the debt's going to go up about $3 trillion a year at its current pace, and only increase because the exponentiality of it all. All right, the Congressional Budget Office, or CBO as they're known, predicts a slight improvement in the deficit for the current fiscal year. And thanks, Jake, for rolling over and exposing yourself to everybody. Estimating it to be around $1.5 trillion, driven by increased tax revenues. However, ongoing debates in Congress over spending measures, including foreign aid, could impact deficit projections. With the current measure of net interest on the debt relative to GDP remains below historical averages, the rising cost of debt of servicing the debt is a growing concern, especially if interest rates continue to climb. Despite optimistic market sentiments, anticipating a soft landing with lower interest rates, hold your breath, the underlying challenges posed by excessive government spending could impede economic growth in the long term. Ultimately, the persistently high levels of government spending, coupled with the lack of concern from policymakers, threatens to hinder the nation's or republic's potential for growth. While the advancements in technology may boost productivity, excessive government intervention acts as a hindrance to realizing these benefits. As such, the risk of an economic crisis looms if corrective measures are not taken to address unsustainable fiscal policies. I've been saying that for a while. Again, I'm sorry for Jake over here showing way too much. Let me move my chair over so you can't see that. Anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, let me put my banner up here. Go to DSAFinancialGroup.com. You can get all your financial planning needs, all the smart stuff I try to talk about. And Get your crap together, people. I mean, seriously. Anyways, all right. Well, like I said, if you need anything from me, go to dsafinancialgroup.com. All my contact information there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.